What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Taiwan Semiconductor Manufacturing Company. You got to say that slow. This is about my fifth take trying to get through that one. Ticker symbol TSM, also TSMC for short, since that company name is so long. On today's video, we're going to go over the Q2 revenue. Okay, they just came out with Q2 results just this morning. We'll talk about them. We'll talk about the revenue. We'll also talk about the Q3 guidance, which came in as well. We'll compare TSM to some of the other chip makers out there, NVIDIA, Intel, AMD. We'll look at it from a price to sales basis because a sale is a sale at all these companies. We'll take a look at that and kind of see where this group is, at least from a valuation perspective. Then we'll jump over to the balance sheet, the revenue, the profit. We'll walk you through all these numbers so you can get really comfortable with what's going on with TSMC. The last thing we'll do is we'll jump over the stock chart. I think you're definitely going to want to hang around for this one, okay? This one's setting up a couple of different ways, okay? We have been channeling sideways for a little bit here, and now we're smack dab in the middle. When you're in the middle of a channel, this thing can create some opportunities one way or another, depending on how you want to trade or buy and hold TSMC shares. So we'll talk about that as well. I think you're definitely going to want to take a look at that one. So this is a big company, okay? $568 billion market cap on this one. You do get a dividend, okay? We're sitting around 1.6% on that dividend yield. You get $1.98 per share as well. So pretty good, actually. Okay, and then so Q2 numbers came in today. They came in, we'll see evidence of this when we go over the numbers here in a second, but revenue came in at $13.3 billion. The consensus was for $13.31 billion, so just slightly under the consensus, but essentially in line, at least from a rounding perspective. Now, their Q3 guidance came in between $14.6 billion and basically $15 billion. The consensus was for $14.71 billion. So basically straddling it a little bit with a little bit of upside as well. Gross margins, really nice. When we look at this company's financials, we'll see evidence of this. Gross margins between basically 50% on this one, and you got operating margins in that low 40% range. Just absolutely fantastic. Now, from a valuation perspective, okay, what I did is I put up TSM here in orange. We've got NVIDIA in blue. We've got Intel in purple and AMD in green. And we see here on this chart, this is a price to sales chart, 3 years. NVIDIA's always gotten, or for the most part, especially over the last 2 years or so, it's gotten a premium valuation, at least from a price to sales basis. And we've really seen with NVIDIA over the last few months or so, this thing is really run. Okay, you had the announcement of the stock split, and I think you've had some retail investors kind of pile into this one. Wouldn't surprise me if the valuation on NVIDIA comes back a little bit. It just has really accelerated, and we're kind of at the tops of ranges where when it's gotten up into these ranges, the stock has sold off. So it'll be interesting to see if NVIDIA sells off a little bit. Will the entire group come back, or will it just be NVIDIA's valuation that will walk back a little bit? We'll see what happens there. Now, TSM is sitting at around 11.6 times sales. Historically, at least over the last 3 years, that is elevated a little bit, okay? Historically, this thing's been more in that 7 times sales. So we're elevated a little bit, but the chip making group in general has just become a more and more important part of the market. You also have competitors like Intel, which have really slipped, and that's why their price to sales basis is only 3 times, because they've really lost a lot of market share to the likes of AMD, NVIDIA, and TSM as well. AMD sitting right around 9 times sales. So as a group, you've got kind of 9-10 times sales TSM, and then you've got the behemoth NVIDIA, and then you got Intel kind of bringing up the rear. If they can turn things around, I tell you what, that'd probably be the value stock of this group. Now, let's jump into the numbers here. We'll kick things off with the balance sheet. Over at TSMC, we've got our current assets here. They give their financial documents. They have these new Taiwan dollars. That's the NTD column. Okay, we'll tend to focus here on the United States dollars just because most people watching this are using that currency and evaluating companies in that currency. So from the asset side, dude, this company looks really good. Okay, we've got cash and cash equivalents sitting at around, we'll call that $26.8 billion. That's a lot. You've got some investments, you've got some other receivables, you got some inventory as well. All things being considered, you got total current assets sitting at about $44 billion. It's a company that has to invest a ton of money in property, plant, and equipment. We'll see that when we get over to the cash flow statement as well. That's probably this company's biggest expenditure is they have to, obviously to make these chips, they have to have like lots of machinery and stuff. Take a look at this, $61 billion worth of property, plant, and equipment. That gives a company like this and all these companies basically in this group, that's why you don't have many players in the chip making business. And that's why you don't have a lot of new entrants. You don't have a lot of new fresh companies coming into this business because look what you got to do. You got to spend, you have to have 60, 50, $60 billion worth of property, plant, and equipment. That takes some time and expertise to set up. And when you got it set up, it acts as a big old moat around your business. Now, what's also impressive about this business, not a lot of liabilities, okay? There's a little bit of short-term loans here. Current liabilities sitting just at $23 billion. You got these, here's total liabilities sitting at $39.4 billion. They almost have that sitting in cash, and they have that in their current assets. So just a very, very, very financially healthy company, in my opinion. Now, moving down to our statement of income, this is basically profit and loss. You got your net revenue here. You got United States dollars here. Here's what's that $13.3 billion number that we were talking about. We can analyze this a little bit quarter over quarter. They have it in the new Taiwan dollar here. But you could analyze this in the United States dollar as well. Year over year, you're up 19% on this revenue. So you got almost 20% revenue growth on this company. That's fantastic. Quarter over quarter, growing at about 2.7% as well. So we've got our gross profit. So we got this $13.3 billion. We spent $6.6 billion. This is where, when we talked about up here, gross margins, straddling kind of right in that 50% range. Here's where you see evidence of it right here. Okay, so you spent you got $13.3 billion in revenue. You had to spend $6.6 billion to get that. You got this gross profit here sitting at right around 50% of your revenue. So that's really strong. Now they've got some other expenses. They've got R&D. Okay, they're making those new nanometer chips that Apple's going to want, that computer makers, that probably Samsung, all these companies are going to want these chips and this technology, and you're sitting at R&D in a quarter at $1.13 billion. But we're seeing here just quarter over quarter, year over year, they're spending almost 25% more on that research and development fees. So that they are investing lots of money into this business. And you probably like to see that as a shareholder. Given how financially healthy this company is, you love that they're spending lots of money on R&D and trying to maintain a leadership expense. Now, they've got sales, general, and administrative expenses. I noticed how low these were. I mean, just $347 million. It's like nothing for sales, general, and administrative. When you have a market-leading position and you have a business with a massive moat around it, you don't have to spend a lot on sales. You don't have to burn a bunch of money like some of these tech companies do. So I love what I'm seeing here. That gives us total operating expenses at just $1.45 billion. So you take this $6.6 billion, you minus off 1.5, that gives us income from operations. Really nice, $5.2 billion. Quarter over quarter, we're down just slightly. Year over year, though, we're up about 11% on that. Now, they've got some other things. They got to pay some taxes, some dividends, things of that nature. We come all the way down to comprehensive income or net income in some place. Net income probably right here. You got about 4.4, we'll call it $4.5 billion. That is looking really, really strong, okay? And they have plenty of, 93 cents per share earnings. They're paying $1.98. They have a pretty nice payout with this one. All things being considered, everything looking really, really strong. This gives it to you from a 6-month view. So what I just walked you through was the statement of income, profit, and loss. That was from a quarterly basis. They give it to you from a 6 months perspective as well. Again, you're seeing that year over year growth rate, even on the 6 month at that, 18, 19, 20% growth rate. That is super strong. You come down here to net income, you cleared $9.7 billion in the last 6 months running this company. That's $1.89 per share. So they're basically making, not quite, but they almost make their dividend in 6 months, and the next 6 months they can use operating the business. Now, I want to show you one last document here is the cash flows. So we get to put, this is for 6 months here. So we pull down kind of this income before income taxes. We add, what this company can do is they add back on their cash flow statement, they add back a huge amount of depreciation, because we talked about property and plant and equipment. This company spends a ton of money on that, and I'll get to that in a second. And when you spend a bunch of money on property, plant, and equipment, that stuff depreciates over a long period of time, but that depreciation is non-cash. Okay, it's something that you just recognize from a financial perspective. So they got to add back this $7.3 billion. That gives you a window in net cash generated by operating activities at $14.8 billion in the last 6 months. That is fantastic. Now, you have to reinvest a lot of that money, because take a look over the last 6 months, property and plant and equipment, they spent $14.8 billion. So they virtually spent all their cash flow from running the business all the way back into buying more property, plant, and equipment, okay, to maintain leadership in this space. When you've got an NVIDIA, an AMD, and even an Intel to a certain degree, and some other players out there, you got to spend lots of money so you can attract the big blue chip clients like Apple and those big customers that come in the door and make you lots of money. So all things being considered, things are looking super strong with this company. Let's get over to the stock chart. We had a monster run. We talked about how this thing was up 80%. It kind of peaked out and really fallen down a little bit. Now, I mean, peak to trough, we went from 141 all the way down to about 107 on that one. That's a big drawdown. Now we're starting to channel sideways. And this is actually where it gets exciting for me as an investor or potential investor. I don't own shares of this. I do own shares of AMD and NVIDIA. But, you know, you're channeling sideways here, and two things can happen when you channel sideways. So what I did is I put our channel here. It's maybe not the perfect channel, but this is what I view. This was kind of a blow off top. Okay, the stock got overheated and blew off and gave it all back, came back, tried to retest these areas, got rejected. It's come back up. It came back up here actually yesterday or the day before and got rejected down today after earnings. We created this nice little gap here. But what I'm seeing here, at least in the shorter term, we made a low here back in May, made another low here. This is a higher low. Now we've made another higher low. If you are long this stock or you want the stock to just keep going up, you don't want to add to your position or whatever, you want it to hold this level right where it's at, literally like right at 117, 116. Okay, it could peek through this lower trend line that I put in here because, you know, depending on how you put this thing in here, it varies the price over here, but you want to see it hold this level. Now, if you want to buy this stock at a lower price, you're looking for it to break right here, right at 117. Really, more specifically, you're looking for it to break this low right here. So this green candle right here, you're looking to get below that, which is right at 116. So we're literally $1 away from that. You're looking for a break below and probably for some confirmation on that. If you break this 116 level, it really elevates the probability of retesting the bottom end of this range. Maybe not the smack dab bottom like 108, but certainly 110, 108, somewhere down in here, you're looking to retest. If you see a pullback in TSM down to this 108, 110 area, it can, in my opinion, create a fantastic buying opportunity because that level was our launching pad all the way up to 140, but it also has acted as support every way down, really for really all year. And so it wouldn't surprise me if we come all the way back down here, retest this 108 level, and then you have opportunities to walk back up into these ranges, back retesting this, but retesting 125. On the way up, let's assume we have a low here, a higher low. Let's assume this 118 holds. you're looking for a break above 125, the upper end of this range, okay? You're looking for a solid candle. Okay, we put a red candle here, it was a reversal. Those are reversal candles. You're looking for a big green candle on volume to get above this line and then push us back up into these areas, the 130s, the 140s. If you're super bullish to this stock, that is what you're looking to happen, really in short order, okay? Because this is a pretty strong uptrend here, or decently sized uptrend, and you're looking for it to break above. You get a rejected here at 125, you're probably coming back down, but as long as this uptrend stays intact, I wouldn't be super worried. It's breaking below the previous low, which sitting is right around 115, 116 right now. You break below that, and it brings lower prices in play with TSM. Which way it's going to go probably depends a little bit on the market as well. And I also talked earlier about NVIDIA, how NVIDIA is at a really, really high valuation. And so it's possible that if NVIDIA's valuation gets compressed, the rest of these does too. We'll see what happens. We've seen times when NVIDIA has tanked a little bit, the rest of the sector really hasn't done a whole lot. So it might not matter too much. So we'll see what happens with this one. This one's sitting right in the middle of a range. Wouldn't necessarily love going all in right here because I think your upside is from 118 back up to 125. That's not great upside. I'd really how I'd like to play this one is if you break above 125, I'd actually buy it there, okay? I'd buy it on the breakout here because you break out here and you're probably coming 130, 135, 140, maybe all the way back up to 140 on this one, okay? So you got like $12, $13 in upside right here, and I'd set a stop loss right under 125 if I was doing kind of a shorter term trade, but I'd play that momentum pop. So that's really what I'm watching with TSM is if this level holds here, this trend line's intact, I'm waiting for a pop above here, and then off to the races. I think that would be a pretty good setup. So hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.